Well, ladies and gentlemen. An interesting drop on the old BTC. All right, but there was a drop across the board. I guess you could say they're getting ready for tomorrow's PCE, maybe. Well, tonight's live stream, we're going to dive into a couple of things. I'm going to be looking at where's the money going, all right? You may have heard me speak about this before regarding the ETFs. I ain't talking about crypto. I'm talking about the ETFs, where the money markets are. Apparently, there's around $6 trillion sat there waiting to be put to work. And the reason why people go into ETFs is because they want to maybe diversify or offset any exposure. Look, hold on a second. Hold on. I know you're all chatting away. Bitcoin ain't dumping right now, so we don't need to be worrying about that. It will move when we finish the live stream. That's the truth. But going back into it, we're going to be diving into where all this money could come from. Word on the street is that, listen to this, a trader has suggested that if Harris comes into power, Bitcoin's going to 16K. I mean, look, Gary Gensler, aka Gary the Egg, I know he's going to be putting pressure on crypto, but 16K Bitcoin. That will then smash out anyone's word on Bitcoin could never, ever go beyond. But tonight we're going to be diving into why holders are starting to move. And we ain't just talking about holders, the general holders. We're talking about the long-term holders. And this is usually consistent with a local bottom, is what they like to call it. So we're going to piece all that information together and come to an understanding if it does sit in line with our 80K projection that we've got going for the September the 18th. That's what we're going to be diving into tonight. We're going to dive into a couple of the setups that I pushed out this morning. We're going to see how and why it's so important that you take profits because the market is just that brutal. NASDAQ was sailing to the upside and then NASDAQ took a shoe bag to the downside. I've been out in terms of being able to trade because none of my equipment had arrived, and it arrives just shortly after NASDAQ takes that shoe bag to the downside. So I'm a little bit gutted, but we got a vector candle that we can trade back into. So, I mean, I took trades this week, started Monday, then Tuesday, and pretty much finished for the week. But I'm probably going to start trading again next week because the week itself does look somewhat forgivable because we are going into a new monthly candle. And then, of course, a bagload of data's coming out by Friday. So, yeah, I think Monday, not even Monday because it's Labor Day for you guys. So, mad love to all my guys in the US. Monday is your bank holiday, which happens to be my birthday. Happy days. Yeah, man. We're going to be getting older and we don't even look it. Sweet. That's if I were to shave my beard, but we're not going to be talking about that anyways. So if you are new to tonight's live stream, welcome. My name is Tino. You have tuned into Traders Reality. It is a mad reality and we're going to try and break it down for you right now. So let's get with the program, gang. Here we go. So SP 500 rallies and loses steam, but most US stocks gain in today's marketplace. So we just go over and have a look at where we are. So if you just refresh this right here, you can see that it's been a little bit mixed. You've got the Dow Jones finishing up, S&P barely up, but NASDAQ, given that it's more volatile, has effectively, it's trading lower for the day, but not that much. But volume is up. Okay, so that explains with the whipsaw price action on NASDAQ's behavior. We just go over to that bad boy. And you can see that NASDAQ is, it's moved away from its daily open to only come back down, to come back up again. But it's happened on high volume, which a lot of people are suggesting that you might want to take advantage of this move in the NASDAQ itself, because this could effectively be the setup for tomorrow's PCE. And what do we mean by PCE? Well, tomorrow it's the core price index that's coming out for the US dollar. Now, the core price index month on month is suggestive that it's the change of price of goods and services purchased by consumers, excluding food and energy. Now, what we got to understand is it's the Federal Reserve's primary inflation measure. Now, they are projecting it to come in at 0.2%. A reading below 0.2% will pretty much tell the marketplace, yep, that's good news for the dollar, but not good for the interest rate cuts, because that means inflation's going down. Then the Fed doesn't really have any need to cut the interest rates as much as the market is anticipating. So that means, are we going to get one whole point cut by the end of 2024? Well, if this comes in lower than 0.2%, then the chances are then we're probably going to get a small rate cut. But if it were to come in higher, then the Fed has then been dealt with a bit of a tricky card. It means that inflation is more than likely going to tick up, which means they're going to have to cut the interest rates quicker so that they can avoid the idea of sending the US into a recession. But the idea is that the soft landing is coming into play, and that's what's focused on traders' minds today and going into tomorrow. Now, with that being said, look at what's been going on. Okay, so let me just present something to you about what's actually happening. Okay, so in front of you is the Harris and Trump presidential run and where we are as of now. Now, what we're seeing is 93, which is effectively, it says here, the yellow states are deemed as swing states. In other words, Harris can't influence or Trump can't influence these states, okay? But that reading has gone down from 200 and I think it was about 100 something. So the reading has gone down. So it looks like there are more states that are starting to get to the idea of who they want to vote for, okay? So this has then got me to the idea that, okay, what happens if Harris comes into power, all right? But then what happens when Trump comes into power? Well, I need to understand what big money is doing in anticipation of this, because the biggest event that's coming out is the rate cut. So what's fueling the rate cut? Well, it's the data that's coming out, and we know that data is coming out. As you can see, going into next week, we have got lots of data that is coming out. So we know that this data is going to influence investors' logic on where we are or moving forward, what we can expect from the Federal Reserve. Now, what I'm going to present to you right now is a little bit of a breakdown on where money is. So that can help us understand if Bitcoin or if other assets against the US dollar or even not against the US dollar, what are investors doing with money? And if we understand that, then we can justify why we can anticipate certain price movements in specific asset classes, right? So let's just go over to this story over here. In front of you is the ETF screener. Now, at the top right here, if I just show you, I've got various topics on types of ETFs that are available for investors to pick up. Now, remember, there's $6 trillion sat in the money markets, and each of these topics here represents that money market. So, for example, if we just have a look at this one right here in front of us, we have got ETFs that you may be familiar with, like the Vanguard, the VOO, the IVV, the TLT, TBL. Okay, you've then got the conventional ones, which is the QQQ, and these are home ETFs that everybody knows. Okay, but this is what I want to draw your attention to. In front of you here, you can see that you've got the TLT. Okay. You've got the you've got the S&P, which is effectively the Vanguard ETF, which is the S&P 500, right? And you can see that that is trailing up. But it looks like it's topping out, but the bonds are starting to slowly climb. If you can see it just about, I zoom in, you can see that the bonds are starting to do this trend upwards, okay? So what's inside of a bond ETF? Well, it's nothing. It's just bonds, as you can see here. Look, let me just zoom back out again so you can see it clearly. That's what you've got. An example of the iShares Treasury Bond ETF, top 10 holdings. That's all that's in there with a little bit of cash derivatives, 1%. Okay. Now that's moving up. Okay. Well, now let's go and have a look at another ETF, something that you might be familiar with. So it was this here, the SPDR S&P 500. What's it made up of? Well, you can see it's made up of Apple. Can you see that? No, you can't. So let me just zoom back out again. Tino, man, what a guy. You can see it's made up of Apple, Nvidia, Microsoft, Amazon, Meta, Alphabet, Berkshire, and Hathaway. Now, this is the most expensive stock in the world, ladies and gentlemen. Remember that. I hope you do know that it is the most expensive stock in the world. And I remember that guy was saying to me, there ain't no stock out there as expensive as Bitcoin. My friend, it's at $702,000 a share. So yeah, that pretty much blows Bitcoin out the park, and it's looking like it's moving up as well, ladies and gentlemen. And it's a very lightly traded asset with only 10,000 shares. Our exchange, well, average daily volume is 1,700 shares. This could be the first stock that goes to $1 million. The first stock that goes to $1 million, ladies and gentlemen. You know, and this is good old Warren Buffett's stock, well, Berkshire Hathaway, the company. All right. So this, in my opinion, ladies and gentlemen, is the true store of value when you think about it for a stock, and look, it's just going sideways, but you got $500,000 of stock right there. Few shares, pick them up, happy days. It's not prone to movement. And you can imagine the people that are buying and selling this are your hedge funds. If you go and have a look at the hedge fund management behind it, you've effectively got only a few players that are picking it up. Only 244 funds are playing it. Funds own 11% of the stock and management owns 39% of it. So yeah, that right there, ladies and gentlemen, is your really expensive stock. How nice would it be to see BTC hitting those sort of prices? Because I can guarantee for sure that you ain't going to see the same amount of volume or shares being exchanged. That's one thing for sure. Because there's only going to be a few players playing Bitcoin at that price. Remember, the US government is trying to pick up 1 million Bitcoin over a period of 5 years if this bill gets passed. That's 200,000 Bitcoin a year. All right? And the goal is to clear off the US debt, 37 trillion. So that means Bitcoin would need to be $1.6 million per coin. Brilliant. Absolutely brilliant. So what am I getting at, ladies and gentlemen? What I'm suggesting here is, guys, is the ETFs for the treasuries, okay? That's where money seems to be going. It's starting to climb up, all right? And that is a little bit of a cause for concern, because you don't want investors going into ETFs that are filled with bonds, because then that means they're not going to be putting the risk on, which could have an impact on the stock market. Remember today's story we spoke about with regards to the bank reports of the losses, the unrealized losses. This was in 2018, and this right here is 2024. It's 518 billion over here, and this one was 252 billion. So nearly double, which when they declared this information, the final quarter led to the move to the downside on the S&P, which corrected 21%. Now, where we are right now with the NASDAQ and the S&P, we are literally repeating the same story, but we've got double the amount of unrealized losses for banks. So this is starting to add weight to the idea why we may be seeing quite a bit of interest in traders going into bonds and moving their money into ETFs that are based on the US bond market, okay? We go and have a look at the bonds market itself, and then we say to ourselves, hold on a second, why would Bitcoin go up? Why should Bitcoin go up? If investors are plowing money, and your heavyweight investors like Wall Street, they can buy the Bitcoin ETF, no problem, but this is their first port of call because they want to try and eliminate as much risk as possible. And if we're going into a realm of uncertainty, then we're going to have a little bit of a problem, ladies and gentlemen. Going by the Commitment of Traders report, you can see where we are right now. Is it starting to fit in line with the behavior of 2018? Well, looking at the Commitment of Traders report, you can see that right here, I don't know if you can see it. Well, you won't be able to see it, but let me just zoom out and I'll read it out to you all. These are the Commitment of Traders trends. And what we're seeing here is we've got a lot of guys that are bullish on the Dow Jones, the SP 500, and the NASDAQ itself. The dollar index is at midpoint, so there's no real clear direction. But this is the funny bit. US Treasury. The guys are bearish on the US Treasury markets. Hey, hold on a second. But wait there. Let's just go over and look at this for a split second. Okay. If I go and search for gold hedgers position, okay, there are 3 classifications or groups which are in terms of the Commitment of Traders, okay, which is the CFTC. And there are 3 types of groups. The first group is commercial hedgers, commonly believed to be the smart money. You've got the large speculators, and then you've got the non-reportables, which are your retail traders, the small speculators. So going by this chart right here, it shows that there are a lot of treasury guys shorting the US bonds market, all right? Or they're bearish on the bonds. All right then. But commercial hedgers, they tend to be the smart money, and they'll tend to do the opposite of what the large speculators are doing and the non-reportables, aka small speculators. So there are more non-reportable traders and large speculators than there are commercial hedgers. So naturally, this data right here would suggest that, okay? But commercial hedgers are doing the opposite of what these guys are doing, which is the large speculators and the non-reportables. So you've got three groups, but there's more of the other two than there is of the other, which means there's more non-reportables and large speculators than there are commercial hedgers. And they will always take the opposite side. Okay? So when I look at this, I think to myself, maybe they're actually making us believe that everyone's going to be putting risk on. That's correct, because you've got lots of banks that are at unrealized losses. And that doesn't matter anymore, because even if you are nearly $500 million worth of losses in bank unrealized losses, then that only makes sense that the market is going to pump to infinity, because that's what happens. Yeah? Well, no, it doesn't, ladies and gentlemen. I'm trying to be a little bit sarcastic here, but trying to get you to realize something, that maybe this logic here is a little bit, well, not misleading. It's not misleading. It's just that there are more people, large speculators and non-reportables, than there are commercial hedgers, and commercial hedgers are going to do the opposite of what the masses are. So in order for people to go short, there has to be someone behind it going long. Take that logic and go to the bonds market and then say to yourself, well, what are the bonds preparing for? Well, we're going into a very big scenario, which is the rate cuts. The yields themselves are going to naturally generate not so much of a great return. But when the yields start to pump up, okay, that's when the stock market is going to take a bit of a battering. But when the bonds start to pump up and the stock market takes a battering, that, ladies and gentlemen, well, in my opinion, you're getting a discount on the bonds right now, because you've got this massive gap right here. And you can see that they offloaded all those bonds and they've just gone and bought a shoe bag amount of them as well. So when I look at this, I think to myself, are they really going into the bonds? Well, look, they are net short on all commodities. Coffee, sugar, feed cattle, live cattle, lean hogs, wheat. They are all short on that. There is an economic slowdown. Go over here to the commodities: crude oil, Brent oil, natural gas, heating oil, gasoline, gasoil, gold, silver. They are long. So the data itself is kind of giving you the clue. They are long on gold. They are long on silver. They're not long on any other commodities. Okay? They stick with what they know. Principally, you're going to think that this US Treasury bearish is only a trap, in my opinion, for the bonds to shoot back up. Because what's the Fed going to do? Fed's going to put money into the marketplace to avoid the bonds losing their flavor. Okay? And guys are going to want to try and lock in some yields right now, because at 3%, 3.8%, well, there was 5%. So those guys are locked in. So hold on a second, Tino. How is this all relevant for BTC? Well, ladies and gentlemen, you've now got an idea of what big money is going to get up to. Okay? Now, what we need for cryptocurrency is we need people to come to the idea of not going to the bonds and going to Bitcoin instead. Which leads me to this article over here. Bitcoin dormant activity hints at a market bottom. Really? Okay. Bitcoin long-term holders are on the move. So the article goes on to say that according to sentiment, Bitcoin's aged consumed metric spiked to 34.16 million on Thursday morning, marking the highest single-day level since August the 5th, when a broader market downturn led to over $1 billion in liquidations. I hope you paid yourselves. The age consumed metric tracks the movement of dormant coins by circulating the time they've been held before being moved, multiplied by the number of coins moved. Typically, long-term holders do not frequently move their coins, so a spike in this metric can often signal a forthcoming shift in market trends. So look at where we are right now for BTC. Bitcoin today takes a little bit of a shoe bag to the downside, ladies and gentlemen. Well, we kind of had this flavor covered. The Platinum members have had this whole move covered all week. Okay, we'll start it off with this right here. Market watch. I do a market watch every single Sunday on what I expect Bitcoin to do throughout the week. Okay, I anticipated that Bitcoin's going to come into the start of the week, make a little bit of a stop run, and then drop down to recover the vector candles down here on the right, on the left. But what it did was it came all the way down to 60 and then made a nice sharp reversal from that point. Okay, and the logic is that we are now inside of this range. Okay, now going into today's setup, this is what we were looking for with Bitcoin. We had the move to the downside, which was at the start of the week. We see Bitcoin contract in this range right here, which in Asian session last night, we had this move to the upside covered, which you saw today. And then we were projecting Bitcoin to try and clear the 61,200 zone, which is exactly where the 800 EMA sat. We go over and have a look at BTC, and she came up to 61,188. I'd say that's not bad. We've had a good time with the projections. They've come back into the vector candle recovery points. Happy days. Even if you go and have a look at Euro today as well. We wanted to see Euro take a little bit of a tumble to the downside. We go back into Euro. There's Euro. We wanted to see Euro try and make a move up. We wanted to see Euro come and hit the range daily low. And if you held on to it with a break of that point, you would have then seen Euro go lower. But what we ended up getting was 1.10533 is what we wanted. And we ended up with 1.10548. Not bad. I'll take that all day. Okay. Quickly going over into another asset. We go over to gold. We wanted to see gold. Look at the trick. This is why it's so important you pay yourselves, ladies and gentlemen, because this is what can happen. We wanted to see gold try and make a sweep up to come down. And we wanted to get the daily open test on gold, okay? And that daily open would put us around, well, the price projection was around 2,504, okay? Go and have a look what gold did today. Absolutely despicable. Look at this. Unbelievable. From that move, they made the move up, well, towards, it didn't make it up too much, but around 11 o'clock, they went from the sweep of Asia, and then they come all the way back down to $2,503, and then it reversed. So if you then paid yourself on that tap of that range, congratulations. If you held on to it, you would have then made life a little bit difficult for you because it just shot back up. Unbelievable. Now, here's another one before I get back to my point. Oil. This is where it gets tricky. This is why you've got to say to yourself the risk. I was looking for shorts on oil today. Wanted to absorb the idea of a nice recovery up. Here is effectively where your stop zone would be. But where the range daily high is where we anticipate reversals to come into play. Look what oil did. Absolutely disgusting. Oil made the move to the upside and tapped that range daily. Look at that. Tap that range daily high. So if you did take a short from the initial point without factoring in the idea of a stop run higher, technically you would have been stopped out at that range daily high. If you're stuck with the hybrid system logic, the green vector candle was going to be recovered, ladies and gentlemen, because at that time, that's when the NASDAQ and the S&P were effectively making a move up. And then that decides to roll over and they come back down. And the short, in principle, we wanted to see it break down lower, but the short came in higher and then they came down. So it was a very difficult asset to trade, in my opinion, today. Bitcoin and Ethereum, they did the business. Okay, Ethereum, she made the move up towards the 200 EMA. Happy days on Ethereum. Let's go and have a look at that. So yeah, she came up towards that 2,000, just missed that 2,600, marginally missed it. Okay. And then she rolled over. But Ethereum's been moving so slow, it's been painful. Okay. So that's the sort of thing that you get with the Platinum membership, guys. Remember, if you want to take advantage of that, go and check out the discount code pinned to the top of the chat where you get 20% off if you use the code new member. Okay. But now let's just get back into this story. All right. We've had that little price breakdown on Bitcoin. If the long-term holders are getting ready for a move, the article goes on to say that this is consistent with short-term, or should I say local bottoms, right? But a 1% move in Bitcoin is not enough. So does that mean we need to start getting ready for going long on Bitcoin? Is that what we need to do right now? Well, I believe that Bitcoin has been primed. It's been set up. Because if you go and have a look at the liquidations, and you look at the longs, and then you look at the bids, just by refreshing this chart right here, guys, I'm not really seeing that many longs coming into the marketplace. So if we zoom back out again, look what we've got here. You got all these guys going long here. What about all these guys? Why is there so much of a high concentration of longs being built? That means guys who are buying Bitcoin, okay? Yet when we get down to these significant lows, we're not really seeing that much activity. Where are the buyers gone? Where's the bids gone? Yeah? I'm not really seeing the bids. But what I am seeing is a lot of liquidations coming into play. Look at these shorts. These shorts right here, they are screaming right now. They are hoping that Bitcoin's going to take a nosedive. And then when you get articles like this, top trader warns Bitcoin could dip to 16K if Kamala Harris wins. Well, do you think that could happen? Ladies and gentlemen, looking at this story here, It's a marginal thing, okay? But if she does win, ladies and gentlemen, it's going to be bad news for cryptocurrency, in my opinion. Sorry, it's not FUD. Please get that out your brains. The logic is she puts Gary in charge, Treasury Secretary. What do you think he's going to do to crypto? That'll be bittersweet revenge on crypto. So we got to make sure something gets done. No, we won't say that. we just... I don't know, man. It's your presidential election, man. You guys can make it happen. All right? Just take that into consideration. With Bitcoin dropping today, you can see the impact that Nvidia has had. All right? Lots of AI stocks or AI crypto coins have taken a bit of a smack to the downside. And that's just a clear example of the impact that the marketplace or the legacy markets have had overall. Look, tried to close its gap a little bit, couldn't quite make it. It's now come back down. But they are saying that this is now a time to start picking up Nvidia. It's a good time to start picking it up. Where was the article that said that today? Here we go. We go into it and it says, here we go. To Steve Sosnak at Interactive Brokers, some investors might be questioning if Nvidia is down so much. How's that relief for the markets? Well, he said it's going to be a good time to start buying it up. And that's what they said. Okay. Trying to find where it actually said it. Here we go. Sell off. The pullback, here we are. The pullback in Nvidia stock is an invitation for investors to buy the stock. Remember, Nvidia has got stellar fundamentals. Okay. Absolutely stellar. For anyone new that's passing through to it, here is an example of that. Look, I mean, it's doing fine, man. Can't complain about it, but the fundamentals are just there. You know, is a bit of a deceleration on its quarterly earnings, but look, it's still up 152% and 122% on its sales. You can't complain about that, man. I'm sorry, given with the climate that we're currently in. All right. But remember, don't forget, there's a lot of bank unrealized losses. And when it comes to banks declaring their earnings, that's going to be a really interesting one, gang. But this is the impact that it's had on the marketplace. And it's something that you will want to start paying attention to, okay? That if you are in cryptocurrency, pay attention to Nvidia, pay attention to the NASDAQ, and pay attention to Bitcoin. And if you do hold any AI coins in cryptocurrency, it will serve you to just monitor what the story is with Nvidia. All right, because it's having an impact. Look, Fetch AI took a bit of a stab today. Let's go to Fetch. Where are we at? Here we go. Fetch AI. Look, she's taking a bleed, and it's more than likely going to try and keep on going lower. Probably try and find the 800 EMA zone. We've got some vector candles down here that they could be going in for around the $1.02 mark. But it's all going to be based on what Bitcoin's going to get up to. Because if Bitcoin cannot reclaim the 60K zone, which we've said that the 60K is effectively the new 20K, it's the new psychological area for the 20K zone, then we just need to be very mindful. Remember, the article does go to say that long-term holders are on the move. But then the problem with that, ladies and gentlemen, is you've got this story here on Bitcoin spent outage age bands, which suggests that miners are putting Bitcoin into OTC markets, and the sum of around 37,000 coins, I think it was. Yeah, about 37,000 coins. It was in what we spoke about at the start of the week. 37,000 coins have been planted on the OTC market, which is the over-the-counter market. And the reason miners have done that is because they don't want to disrupt the spot market, because if they start plowing money into exchanges, then people are going to get a little bit concerned, and that could lead to a crazy price sell-off in Bitcoin. But this article goes on to say Bitcoin long-term holders are on the move, which could be consistent with market bottoms, which could be consistent with Bitcoin moving up. 1% move is not enough, because that's what this effectively was. It was a nice 1% move, 2% move even, but it's now given it back and come straight back down to the daily open, where there's been a bit of a strong test on that zone. So with going into tomorrow, we go into the daily chart itself for the holders, and we understand, I mean, look, man, the rejection of the red vector candle, like it's been there. We wanted to see it try and come up a little bit more, but they've now rejected this range. Now, the start of the next daily candle is going to be very, very important. But the next 2 hours and 25 minutes is going to dictate if Bitcoin can sustain itself higher. Why? Because Bitcoin's price needs to trade above yesterday's open. It has to trade above that, because then that would mean that there is interest to keep Bitcoin in this range. All right. So even though we've got the idea that the holders are on the move, tomorrow, realistically, would be the only chance that Bitcoin has to really continue with its move higher and solidify a range break from this point, which means that the short liquidations are going to get attacked and ripped apart. Everyone's going to go crazy because everyone right now is going short. What a perfect time. Everyone was going short the day before and they ended up paying the price. You can see that right there with these high margin liquidations right there. Look what got sold. An initial order of 500,000, but the traded value was 10 million. That's telling you that investors are stepping in and they are watching these charts like a hawk because it's grabbing people's attention, right? We need to wait and see if people believe that Bitcoin can go higher. Because when people start going crazy about Bitcoin and the bottom is in and what have you, that's when all these dudes that have been buying up the Bitcoin are going to sell it. And that's where price goes higher. And that's when they start taking the liquidations. Talking of liquidations, you look down below and you can see that we've now had a reduction of long liquidations right here, but we're starting to see some short liquidations coming into the plan. We need to start seeing the short liquidations because they have not taken that many short liquidations. There's not been that many short liquidations. This could be the start of it. So look, zoom out. Zoom out. And now let's just do this. We have got a cluster of area here. You see that? You've got that cluster area of bids. And then you've got this cluster area here of offers. All right, then. We go over here. There was some bids here, and then they just quickly come back up and liquidated them, okay? Now we've got this area here where you've got cluster of bids, less of a cluster here. Now we've got a pending cluster of offers. So the logic would suggest that we would anticipate Bitcoin to try and eat those short liquidations because the bids are not there. And when the bids start to move themselves, it means they're getting primed to sell. So their orders are up here, waiting for guys on X to go crazy and buy up the Bitcoin. Exit liquidity, ladies and gentlemen. That's where it's at. So now go back. We know that the bonds market or commitment of traders report might be giving us a little bit of a different scenario. Remember, you've got them here suggesting that they are short on the treasury bonds market. The commitment of traders report says that on gold, hedgers themselves are getting ready for gold to come down. We know that there is more guys who are non-reportable or AKA small speculators, and there's more large speculators than there is commercial hedgers. In other words, commercial hedgers have more of the money, but there's more people putting a lot more money against the commercial hedgers, but the commercial hedgers will do the opposite of what these two guys are going to be doing here. Large speculators, non-reportables, okay? So I genuinely believe that we're getting ready for what would be a pump in the bonds market, which will naturally then end up sending the NASDAQ and the S&P lower. But that's going to be an instance after the rate cut. It's up from here. But when it comes to the rate cut, that's when we're going to see the true flavor of the marketplace. When we have September the 18th coming into play, that's when we will have a conversation about what we can expect moving forward. But like I said, it's all being primed. It's not going to happen overnight, but we've got big events coming. And these things right here, they're going to try their hardest to sell them because look what's available for sale and look what's held to maturity. They want to try and get rid of it. They really do. And that's where you're going to get your all-time highs in the stock market. And hopefully Bitcoin can actually try and claim its own all-time high by September the 18th. That's my logic right there. Any questions, ladies and gentlemen? Any questions? Pattern is getting too predictable. Just because they've influenced Bitcoin's trajectory, the only reason we're feeling uneasy, dump to fall. How many of you actually think Bitcoin's just going to dump? You know? How many of you believe Bitcoin is just going to take a drop to the downside? So what do you think of TMF, 20-year Treasury Bond ETF? Wait there. I'll find it for you. Here we go. Should have the TMF bond here. I don't have the type of TMF. It's not there. Hold on. TMF. Here we go. I'm guessing this, what is this one, my friend? I'm not seeing it come up. I can't see it. Here we are. No, it's not. Oh, here we go. I'm guessing if this is the one, my friend. What do I think of this one? Well, that's very, very low, but it's starting to show an increase. But I mean, if this is the one you're talking about, man, it's not been doing too well. But like I said, like this, in my opinion, you're gonna want to just focus on the TLTs, in my opinion. You know, it's one of them ones. Or the TLT bonds market, man. When this starts to make a move up, then that's when you got to really pay attention to it, especially with where we are right now. Everyone is bearish on the 10-year treasury markets. Right, and if knowledge serves me correctly, here we go, look. For every time there is a sharp inversion or a negative correlation, you can see SP 500 is the blue line. The 10-year notes futures price is the red line, right? Look at that. And when you go back into it all, now the marketplace goes down, the bonds are going up. So they want low risk, okay? Markets go down, bonds go up, okay? Now we are markets up and the bonds have based out. So that's then sitting in line with my story that global commercial hedgers are setting up to go and plow into the bonds because they need to do that in case it gets a little bit tricky in terms of this story here, 2018, and this is 2024, which that effectively led to the 2018 crash. Going back in your charts and look at the 2018 September quarter 3, and look what happened to the stock market. All-time high, yippee-ki-yay. Drop to the downside. Just take that into consideration. Bitcoin up from here. Couldn't even hold the 50%. I've been holding TMF for 10 months. Okay. Thank you very much. Happy days, happy days, happy days. Again, yep. Anyone that does join the Platinum membership, make sure that you're using the discount code where you get 20% off it for your first month. And it doesn't matter when you join. It will just roll over to the next month in the sense where, let me start again. You join today, it will be the next 29th of the month where you get recharged again. Okay, and you can cancel at any time. So that's that one there. Bitcoin has one good shakeout left in it, surely. Or maybe. Tina, could you give an example of the 20-20-40 strategy for current conditions on Bitcoin? All right, I'm going to give you that. Okay, here we go. The 20-20-40 strategy. Okay, this is a strategy based on the principles of Jesse Livermore. Okay. And Jesse Livermore always said that you should always split up your plays, split up your bets, and always have cash behind you just in case. Now, the 20-20-20-40 method says that if you've got $10,000, let me break it down. You've got $10,000. You're going to split that $10,000 up into 3 segments of 20%. That means you've got 2K, 2K, 2K. That's $6,000 of that $10,000 split into 3 positions in principle. That means you've got 3 buying powers, 20%, 20%, 20%. The 40% in principle is the cash you got in the back pocket just in case you are able to grab an asset where it's taken a sharp move to the downside and then it's starting to try and climb back up again. All right. An example of that would be like this. Let's say you are trading this logic right here, which is the Japanese yen. You start seeing the yen carry trade principle. You start seeing Bitcoin making a move lower. Remember, you got 3 workable positions, 20%, 20%, and 20%, okay? From your 10 grand. You would load 20% in this area here. Bitcoin continues lower. You think, okay, cool. It goes down again. You load another 20% here. Fine. You then load another 20% here. Then you are on the risk factor that even if it does continue to go lower, and hypothetically you can assume it does, you've now got an opportunity to put 40% of your capital at the lowest point where you think that Bitcoin's going to stop and it's going to reverse from. And then the reversal that comes into play, you're earning money on the 40%. You then see price go back up to the 20%. You're at break even there. but you've now made some more money on the 40%, which in principle is increasing in value when you close it. So now you take profit on that 40%. That 40% of your capital has now increased in value. So now you keep that in the back pocket. Then you go into your positions and you say to yourself, all right, where's Bitcoin at right now? Well, Bitcoin's made the move to the upside. My first 20% is at break even. It's now climbed up again. My next 20% is at break even, but now I've got a profitable position right here. I might want to close off this position, or I might want to hold on to it. It then goes up into this position, break even. Now it's made the move up. You're now at break even at this point. Now you've got profit in this position, okay? And then you anticipate that if Bitcoin continues up, you would have effectively had 3 of your 20% all now in profit. The working capital right now is effectively generating you a return. And if you were to close all of those positions and Bitcoin at this price point up here, your 20% working capital has now increased. So then that means the next time you decide to play the same strategy, you can hold the trade for less time because you've now got more capital behind your working capital, which is your 20%. Okay. Now, if we apply it to this situation right now, you would have effectively loaded up 20% here. That's your first bet in principle, hypothetically. Not financial advice. I could go on. Right? That's your first bet. If Bitcoin were to go down again, you'd place another bet. It doesn't have to be 20%. It could be 10%. You might want to be 50% in cash. You might not want to use that strategy. You might just want to do 30%, 10% here, another 10%. Because you're factoring in the idea of maybe Bitcoin could go lower. I'm reducing my risk by only putting in a little bit of cash because I need proof. Now, if Bitcoin's going to exceed from this point, and we're playing the idea of September rate cuts, from now going into September the 18th, Bitcoin should be trending higher. We've got volatility coming. We know that. Look what's going on here. And remember, all the data that's coming out right now for the US dollar, and I was explaining it this morning, the data is like this. If it's good for the dollar, that means the economy is doing good. That's bad news for the interest rates. Why? Because then the Fed has no reason to cut as aggressively as the market wants it to. If the data is bad for the dollar, that's good news because it means that the Federal Reserve may be considering cutting the interest rates aggressively. So the best way to get around that is to wait until the news comes out to get a good idea of how the market will translate it. All I'm saying is you want to pay close attention to the bonds market, because if the bonds market's slowly starting to move up, there'll be an instance when they start moving up aggressively. And I think that they're going to start moving up aggressively as we get towards the September rate cut, September the 18th. Bitcoin will do a blowout move to the upside, grab the liquidity, and then make a bit of a reversal to the downside. The traders would have effectively locked in yields at the current price points, and then the bonds will then shoot up, the yields will then collapse, and then investors will then play. Hope you've enjoyed tonight, guys. Mad love and respect. Platinum members, I've got some flavor coming your way. Take care of yourselves, gang. Peace.